Hello, it's great to meet again for another episode of the Aleph Zero Podcast. In today's episode, we'll be meeting with Pawel Kuskowski of Gatenox to discuss the regulatory landscape that heavily affects the entire crypto space. We'll be looking at both the current state of legal regulations as well as the trends that are shaping the whole industry. And let's start with having our listeners get to know you, Pavel. I've done a bit of research and it seems you've done quite some heavy lifting when it comes to compliance, not only on the crypto side, but we'll get down to this in a bit. But how did you transition from managing AML processes in the likes of Royal Bank of Scotland to founding CoinFirm?
Hi, Mateusz. Pleasure to be here. Thanks for this question. Actually, the kind of my life, the AML, KYC, compliance in general, that's something that I dedicated my entire professional life. And that's something that it's close to my heart in a number of ways. I'm at this age that I grew up still in communist Poland. And it's something that corruption and in general that money laundering was present. And we saw this in a daily life, how it affects people and how it affects economy, how it affects society in general. That's something that is very close to my heart, and that's something that early on during my career, I graduated from law, and it's something that already during my time as a law student, I look at regulations in the area of compliance. There's a lot of work on competition side, but also on the anti-money laundering KYC. And then I transitioned into different jurisdictions. I moved from Poland. I studied in Italy. I did master in banking and finance, where I saw how banks work. Actually, this was really good experience. So in order to, and that's something that it's important also to understand when you do compliance and when you do AML properly. In order to do this properly, you need to understand how organizations work, and that's something that it's critical. And it's something that when I speak on my podcast on the crypto compliance, I ask this question every time my guests. How you approach building compliance. Every time I hear you need to understand the process, you need to understand the company. That's something that is also critical when you talk about compliance in crypto, when you talk about compliance in a centralized exchange, decentralized exchanges, how it works. So that's important, factor. And I think, after this, I did, banking and finance in Italy. I moved to Ireland when I qualified as a lawyer. And I also, work in the banking sector. So AIG investments. And then I moved into UBS investment bank. And then I moved into RBS. In RBS, I was responsible globally for AML function and systems and processes, quality assurance. And that's something that, frankly speaking, taught me how actually it shouldn't work, AML in general. One thing which is very interesting in this space, in our space in crypto, in comparison with banking, that banking sector is saying that you need to put everything in order. There's huge money laundering happening in crypto, all this stuff. But actually, by far, the size of money laundering happening in traditional banking is much bigger than in crypto, which of course doesn't mean that, crypto can say, listen, these guys are, worse in money laundering, so we shouldn't do anything because, that's not fair for us. It's not the way, we should approach this. I think in general, this is very important to understand that you can think of AML, KYC, all this stuff as simply as regulations. But you need to look at this from the perspective of society. So there's a number of studies, research, where you see that money laundering leads to corruption. Money laundering in principle is money coming from criminal activity put through different mechanism, either company structure, traditional finance, crypto, art, whatever, right? And the criminal proceeds to appear to be clean, so criminals can enjoy it. That's in principle what is money laundering. And money laundering impacts every segment of society. It leads to corruption because this money is spent on political sector, let's say, on politicians, on government, on local governments, all this stuff. And that's hugely impact, how society operates, right? Because then the rules which you believe applies in society do not apply because there's second, let's say, flow of decision making influenced by criminal money. So that's something that it's important. And that's, let's say, corruption in politics. That's one thing. Then you go into other areas like drug trading, big topic which is right now human trafficking, kidnapping kids, all this stuff. That's something that is also huge, and it's also something that is fueled by money laundering. So if you think about why I need to do this KYC, well, it impacts my business. You need to think that, if you don't do this properly, you will be channeled for, funneling money, which is then impacting your local society, which is then impacting, criminal activity, because it's actually fueling criminal activity.
So can there be a direct effect when you can actually, lower the amount of, the magnitude of this?
Exactly. And
Then you make the society in better position, right?
exactly. And that's something that it's doable, right? The rules which we have already in place, if properly followed, could prevent money laundering, right? That's something which is like, I'm 100% sure. And I'm going, actually, we have this annual meeting, financial crime symposium in Cambridge, which is basically a meeting of, 300 plus people from around the world talking about financial crime. Crypto is part of this, but in principle, this is something that it's much broader. And you have people from China, US, Europe, Asia, where we talk about what's currently happening around the world in terms of trends in financial crime, how you can prevent this. So there's really passionate group of people, and it's something that I'm very pleased to be part of. People who are actually really thinking about fighting financial crime. And these people, if you meet these people, these are like, people who understand that it's something much bigger than simply doing the job. It's actually protecting others.
Yeah, and how does this apply to you founding CoinFirm? So is this, how big of the whole process preventing those processes was the founding CoinFirm, right? So basically, could you say that you made people's lives better with that?
I would say, I think this is something that the idea came in 2013, right? When I was chairman of the Polish Compliance Association, which at that point of time, it was 300 people from Poland, from different organizations, banks, financial institutions, government, financial crime prevention groups, all this stuff. And we had these three young guys who were talking about Bitcoin, right? And there's like opening session for the entire conference, and there's like really,
No one was talking about Bitcoin back then, right?
yeah, exactly. And then these three people were saying, oh, it's fantastic because it's international, it's anonymous, you cannot trace it, you cannot stop it, it's an outside government control, all this stuff. So like you could understand what was the reaction in the crowd. But funny enough, I saw reaction as well. But in most conservative, I was sitting next to people who were like chief compliance officer from two largest banks in Poland. At some point, the guys open up slide, and there was like, oh, you can download here the app, right? And I saw this guys actually most conservative of the most conservative people you could meet. They opened, they download, and they actually bought Bitcoin. So I said like, all right,
Good for them.
yeah, exactly. 2005, that was the best investment of their life, 100%, So, but at the same time, I saw, how they accepted this risk, right? And I said, okay, if these guys are accepting this risk, this must be something in it. And then I look at the underlying, structure of blockchain or Bitcoin. If you can understand that, transaction flow, and you can read this, you can analyze this, and you can add additional points to this, that's something that immediately told me that that's something that it's perfect for AML, right? And just to give you some background, I was, as part of my engagement in RBS, UBS, I was part of various working groups, international working groups, and some of them, I mean, one of them was very interesting. I think, at that time, either Visa or MasterCard did the project when they opened up, I think, 1 month of transactions from their books, anonymized transactions, but you could see the balance, you can see the transfer and all this stuff. And many of the banks participated in reviewing what they can extract this from their perspective, and the amount of understanding on behavioral patterns, identification, which you could get out of this, transfer was staggering, right? And the same thing applied to Bitcoin immediately in my mind, right? So, and that's something that brought me to the idea that we need to do coin firm, we need to do blockchain analytics, because that's something that it's fantastic. And idea was that we need to prove that it works for crypto, and then we can leverage this and apply this to the banking sector. Because in banks, the difference is that there's one organization, Swift, which is managing transfer between banks, and Swift is effectively blockchain, right? And the Swift is, a very interesting organization because this is, it's composed of international banks who are participants in this. It's very old school process, which is failing in many times, all this stuff. And I tried to get my hands in, on the data from Swift, and it's impossible to get, right? So effectively, the bank is receiving transaction from another bank, and they don't understand, the background of the transaction. They don't see where this transaction was coming from, the amount, who's behind, all this stuff. They kind of get some data in the Swift messaging system, what's the reason for the transfer, all this stuff. But in principle, they have no idea, right? So you actually...
So they just get the money and some data, right?
Yeah, and the data is typically very poor, right? So it's almost like, transfer between centralized exchanges with poor KYC. Let's put it in this way, right? So, and in comparison, if you have all the transactions on blockchain, right, and majority, I think still majority of the transaction is happening on blockchain, not the centralized exchanges. That's the data which is very good for analytics. And I think this was the idea. I mean, this was the idea for CoinFirm, and same at the same time we have Trinalysis, Elliptic, so other organization doing very similar stuff. When we start CoinFirm, when we had this conversation with Financial Action Task Force, with various organizations, I did presentation to DEA, FBI, CIA, all around the world, like to Asian, UN, ODC, which is the United Nations Office on Drug and Crime. And when we saw what we can get out of this, you could immediately saw comfort in the eyes of, financial crime prevention guys, because they understood that, okay, we can actually control this. We can understand what's happening in this crypto. It's not anonymized, right? And I think, the work of the companies like CoinFirm was critical for crypto to become mainstream. Because if this would be, and this was I said this, I think 2017, 18, when Monero and, Zcash was actually, first rolled out. And I said that it's not going to last because the market is simply it's not going to accept anonymized payments. I think Monero is, in terms of technology, I think it's still was one of the best on the market in terms of anonymization. So that's something that I said it's going to be challenging over time to actually have fully anonymized payments. I mean, it's very interesting because I think it's needed, but you cannot simply just close your eyes and say, we don't care, we cannot transfer. I mean, we cannot recover this information in any way. So that's something that was in my mind, immediately sparking, some questions.
Yeah, it's definitely, you can have it for part of the market, but one that accepts its gray area, right? But for mainstream, you definitely want to be compliant.
And you had this, I mean, one of our first clients was Dash. And they had this mechanism. What was this called? I don't remember, but you could actually send private transfer, and it wasn't traceable. You just simply had to change some settings. By the way, it sounds like ages ago, and it was like I think 5 years ago when Dash was still top 3 or top 4. You could choose the private send, and when we work very closely with Dash team, and turns out that I think 0.5% of the user choose this option, which was immediately saying that it's not that much of convenience to kind of make it private. So it means that if you are impacting the let's say the ease of or UX of the transfer, it's immediately the choice is okay. I don't care. It's gonna be traceable. I don't care. That was my kind of part of my learning in this.
Yeah, but some might also say that they are anonymized to the extent of being behind the public address, right? So it's, of course, it's not complete anonymity, but you might.
Yeah, I think if you are in crypto and you believe that you are behind public address and you anonymize, I mean, you're fooling yourself, like big time. This is something that unless you have really very good understanding of how you can anonymize yourself, and I think there's a couple of people in the world who can actually do this. The quality of tracing mechanism is incredible.
Yeah.
Right. So I have so many funny stories, which when people believe that, oh, it's I'm gonna use, I don't know, Tornado Cash to anonymize my transactions. I mean, come on, it wasn't like this. It's much easier to trace.
Actually, can you give us a little bit more detail on that? So would you say that uh, X amount goes into Tornado Cash, X goes out, so what was the endpoint? This is what would be the mechanism here.
Yeah. So there's a couple of, I mean, I'm not following this space, as closely as I used to, and when I was in Coinfim, right? So I don't know what's the current, mixers which are, top on the market. But just to give you an example, historically there's a couple of mixers on the market which everyone believed that it's fully anonymized, not accessible. It's protocol, something like this. That's when nobody knows what's happening. First you could, the way we approach this is we were sending small transactions into this mixer, us as Coinfim, which is blockchain analytics, right? Small transaction to the mixer and seeing the pattern of exits. And you will have at some point enough data points to understand how this is structured internally, right? I mean, what's the pattern of algorithm of distribution, how you can actually follow these funds. Then there's, I think, we created 6 methods to trace these funds, even if they're going through mixer. Because even if they are going through mixers, at some point they are kind of, they are brought together, and it's very similar because it's very similar structure to the way it's traditional. So you have smurfing, layering, integration, right? Smurfing is you put some small transactions into the banks, and so I don't know, people are coming and paying small money, but in large number of transactions into the bank, and this is smurfing. Then layering, you do a different transaction, and then integration is coming to one address or connected addresses or one bank account or connected bank accounts, and this is where someone is taking this money out, right, or paying for something. So, and it's exactly the same thing is happening in crypto. So we saw like 2,000, 20,000 of addresses involved in layering, but then and some of them were going through mixers, some of them going through decentralized exchanges, some of them going from centralized exchanges, but at some point they actually coming to one place, right? And without, I mean, if you try to do this with with simple approach like clicking through transaction, it's impossible to trace. But if you have like visibility into the entire blockchain, and you can understand where is it going and how it's actually being integrated, then even if you don't know, but it's actually, you cannot be 100% sure that these funds are going through the mixers, are actually these transactions. During integration, you can make sure that, it's 100% then, and it's actually, you can evidence this in court, and we've done this a couple of times in the US. Actually, we presented this to the court and say, listen, this is FIFO, LIFO. There's a couple of methodologies to do this. We trace these funds, this clear evidence that these funds coming from hack, they've been integrated, and they are coming to this one address. And this guy, and this was typical work of companies like Kroll, for example. We trace this fund to this address. This address belongs to this physical person, right? And this is the way you could trace, and you can bypass mixers. Another important factor is that many of those fixed mixers, these are also run typically by normal guys, and some of them, we learned this later, some of them simply they maintain internal books for the transactions. And if this is done for the reason of, if they are passing through hack funds and all this stuff, and suddenly FBI would come to them and saying, like, listen, we want to understand where this money, where this Bitcoin came and where this exited, and show us your internal transaction patterns. They simply were handing over, which is incredible, right? Because you don't know this type of stuff happening normally on the market.
Yeah, they were ready for it. So would you say that's basically how CoinFirm and similar solutions work? This is basically pattern recognition, and this is what's so great about blockchain's transparency, right? Because you can have it.
Yeah, and there's a risk, and I think this is what's coming to. Part of the work which we also doing with Aleph is how you protect the privacy, and that's something that it's critical. If you understand how it is done, and then you try to kind of avoid this being traced, and that's something, one is the government. So I think you can be 100% sure that your funds will be traceable one way or another, and it's a matter of how much money is involved, how bad things happen, and how government is, especially US government, is kind of focused on understanding who is behind the transaction, and anything else would happen, and it's actually recoverable. So if you're doing bad things in crypto, that's something that it's very risky.
You're not getting away with it, right?
Yeah, exactly. It's very difficult to get away. And it's funny because when we start CoinFirm, we had this meetups in Warsaw, and I remember when we start showing our tools, and when I said this, like, listen, if you done any transaction in Bitcoin, at that time it was mostly Bitcoin, and you bought something and you think that you're gonna get away with this, it's impossible, right? Because if it's you've done this, actually that's on blockchain, that's something that it's a matter of, if the data is not available right now, it's gonna be available one day in the future. And I saw people going pale because they understood this, so that's something that it's definitely important. But this aspect of privacy, and the privacy is important for a number of reasons. If you, for example, operating in digital space, you're running your business and you receive your payment, and that's competitive market, right? At some point, for example, you move into crypto and you start receiving payment, and let's say you will receive 100% of your payment in crypto. If someone has analytics tools, they can understand how much you are getting, when you are getting, from where, like what's the typical customer, structure, when they're actually doing transaction, all this stuff. And this is something that is very risky for those type of businesses, right? So, and this is the element which you need to make sure that if you don't do anything wrong, but at the same time you want to protect your privacy, you want to protect your data. This is the aspect which is critical for crypto. Unfortunately, and to my surprise, there's not so much happening in this space, right? it's almost like focusing. I don't think actually focusing on individuals, as a main driver for privacy is correct. I think the main driver for privacy will be large organizations, right? Because
Yeah, they were using private blockchains for that reason, but they are not the solution, right?
no, private blockchain. I don't think like nobody's thinking about private blockchains anymore. I think that's gone. But they're definitely concerned with privacy and visibility and data which someone will be able to access.
All right, let's shift gears a bit. And to those that missed it, Aleph Zero is of course currently undergoing the integration with CoinFirm for various reasons, and
With Coinfirm and Gatenox.
and Gatenox was what I wanted to get down to. So yeah, Gatenox is one of the really promising projects built on Aleph Zero. So if you'd could give us, a brief overview of what are you doing there.
Yeah. So with Gatenox, we are looking into bringing more corporate customers into Aleph Zero and other blockchains as well. And it's something that it's critical. I mean, I believe that it's critical, and that's where the next growth is actually coming. It should be coming from large corporates, smaller corporates, which start using blockchain for like payment ecosystem and all this stuff. For them, in order to do this, they need to make sure that the ecosystem is compliant, or they understand the counterparty risk, which is, I mean, the counterparty is, if you are sending to someone or receiving from someone any funds in crypto, you need to understand two things, where these funds are coming from, so the risk connected with transaction. And it's something that blockchain analytics would be looking at. And then, another part is, who is behind the transaction in terms of, on the other side, what is the company and who is the directors, who is the beneficial owner of this company. And something close to our heart is, if you wouldn't like to have someone on the receiving or sending end, someone from Russia, right, let's say, or someone supporting Russian government, or someone coming from, I don't know, North Korea. Not many people in the world would like to have this type of engagement. There's a risk. I mean, there's kind of personal belief, but also there's reputational risk. There is potential criminal prosecution, and there's a number of other risks which would be connected with this type of closing eyes and just simply receiving the money, especially when we talk about larger amounts, larger being anything above 15,000 USD worth of transaction, which is like 1/3 of Bitcoin. So that's something which would be creating a risk for you as a counterparty. So Gatenox is looking at this corporate structure. We also help projects which currently operate in the blockchain ecosystem, and they want to open up to corporate client, and they want to do this in the compliant way. So they can also use our tools to onboard corporate clients in the safe and secure way. So that's another way, and that's something that we've done for Aleph Zero at the moment, and we want to expand on other aspects with Aleph Zero. And there's another aspect to this, which is like, okay, when you onboard someone already to our tool, let's say to Gatenox, and I want to interact with an ecosystem built on, for example, Aleph Zero, how I can actually interact. And it's something that you think that this knowledge is commonly shared. It's actually not, because this is something that if you talk to large organizations, they don't know where to start. So we want to help them to create wallet address, help them to create, and we start cooperation with A0 ID identity on blockchain. So that's something that is very easy for them to interact with anything which is built on Aleph Zero on other blockchains, right?
And I know that also part of Gatenox is really simplifying or making the KYC process for them really fast, right?
Yeah. The way we approach this is, traditionally, in order for the company to open an account in in the bank, but also in Binance or in Coinbase, it takes up to 6 weeks on average to open account on this large players. We actually bring this to like 5 minutes because we collect a lot of data prior to this information being provided to the service provider, to when you are opening account. So we collect data from various sources, registries, internet, we're scrapping data when we know what we are looking for. And we put this in one place. We analyze this. So it's very, very simplistic way of doing KYC for, this organization, but also for the individuals.
And are you seeing growth in interest in such solutions? Are the corporates coming?
Yeah, we see this coming, and we also see that there's definitely interest in like really easy plug and play solution, right? Because I mean, it's a huge market. If you can imagine that you can with starting from the amount of like 500 a month, you can access completely new market, and there's zero risk for you as an organization to bring new large clients, and you also can show this to your investors, your community, that you do everything in line with law. I mean, it's cost almost zero, and you can bring big clients, big players, big money as well. So that's something that it's completely game changer, right? To make it easy, to make it accessible, also to not to limit you. And there's something we know which should be quite clear. The way we approach this is like, if you have any payment solution like Ramp Network or others, right? They do similar stuff. They lock you up to the payment mechanism, right? If you are in the payment infrastructure, or you happy to accept crypto, you don't have to go to them. You can do this very quickly yourself with us, right? So that's something which is the client interaction is completely different.
All right. Yeah. So actually, we met to talk more maybe about the compliance, right? And I was curious, with all your background and being really active in this space, how would you say the compliance and regulatory aspects of the market are changing over the last over a decade probably?
Yeah, I think, I mean, the one thing which I can say, in these 10 years, I am quite surprised that regulators are so light on crypto,
So light.
right? So there's so light, yes. I mean, you need to understand that, these rules, many of the rules which crypto right now are realizing existed for like since 70s, right? And there's nothing new was like out of the blue created for crypto. It's the same asset. I mean, if we start treating crypto in a mature way, we need to say, okay, this is simply different financial asset. There's deviation of this, but in principle, this is different financial asset. And then when you think of this, from this perspective, and when you think about tokens, being shares, or tokens being payment mechanism, that's something that is very similar to traditional finance, right? And it's something that existed for a number of years. The rules existed for a number of years. The risk existed, the risk which I mentioned, like, corruption, drug trading, human trafficking, all this stuff is it exists, and it didn't just came out out of blue. It wasn't like, okay, we just simply close our eyes and we say that, oh, the criminals will not use crypto. Right? And that's not true. That's not reality. So that's my surprise in this 10 years. But only right now we see really big enforcement coming from, especially from the US. Let's say, if we talk about a little bit about geopolitics, the only true power, in this context is the US, right? There's nothing.
Everyone's looking at them, right?
Yeah, exactly. So we can say that Europe is doing something, Switzerland and all this stuff, but reality is that the price of Bitcoin is closely related, or the price of other tokens is and coins is closely related to what SEC is saying. What are the regulations coming in the US. So we cannot just simply say that's not applicable. Or we just close US and there's nothing like this, like, oh, we just trade outside the US. I don't think it's reality. And the US is finally coming to the point when, I mean, from compliance perspective, so there's me loving crypto and there's me understanding compliance. Loving crypto, I hate what SEC is doing, SEC is doing, like, oh, that's like, why we are going after our assets, but then when you think about this from compliance perspective, and when you talk to people in compliance space, it's like, this was coming, we knew this for a long time. It was coming, like everyone was simply closing their eyes and saying, no, it doesn't apply to DeFi, we just simply smart contract, like it's not happening, to us. I mean, we just technologists, like, oh, come on, so that's something the SEC is, and the US is doing this slightly different than Europe, UK, and other jurisdictions, because that's like it's a regulations by enforcement, right? So they issue regulations. If you don't apply, that's fine. But at some point of it, they're just gonna come after you, put you in jail, or put you in the trial, and that's it, right? Like it or not, it's happening, right? If you are opening your business, crypto business, I will be hesitant to do this in the US unless you want to go 100% compliant, 100%, working with every organization and government in the US, and that's something which is doable.
It's doable because the case was with like with Coinbase. I think they said that they couldn't get any guidance. That was their case.
Well, that's also something that if you ask people from the US regulatory lawyers, many of my friends, would say like, come on, like that's not something, if you go and ask, can I steal the car, like once, second time, like third time, I mean, do you expect the answer, or do you expect simply, like, go and read and understand yourself, that's your risk. We're not going to advise you on whether you can do this or not, right? So that's something which is extreme. Yeah, and I get the point, but on both sides, and I think both sides are exaggerating very much, right? I think Coinbase completely understand their position, and they understand what happened wrong. I don't think like, to be frank, the SEC is also incorrect in a number of ways. I didn't meet any lawyer, any senior lawyer, who would say that tokens would be security, except a few which would be like directly security. So that's something when you say like, oh, you just simply security, that's some overstatement as well, right? So yeah.
So would you say that we are on this bumpy road right now, but once the US settles all those rules, probably over the next, I don't know, months or years, then we should be good to go with having clear setup for most of the crypto? What could happen here?
Well, I'm very positive on the crypto sector, blockchain, NFTs. I think there's a lot of promise in our sector, right? And I think it's gonna be cleared. It's gonna be properly done. The worry is that there's gonna be taken over by big players. That's something that I'm worried that it's not going to be like builders, gigs, and many people who truly believe it's going to be changing life of many, and it's going to go into traditional finance, spin-offs of traditional finance, and this is where crypto going to be like regulated, but at the same time it's going to lose the entire, let's say, vibe of freedom and vibe of really doing something correct. And as especially when you look at countries like Argentina, I have a lot of friends from RSK and other projects in Argentina, and for them actually crypto is the only safe place to go with money, because otherwise, simply speaking, government gonna destroy the value they created, the life savings, anything. That's something that for them is real risk. And it's easy to say from let's say, northern stratosphere of countries, when you have all civilized, everything is fine, and you compare this to the likes of Venezuela, Argentina, a little bit Turkey, this type of countries, where you really want to have some safe place to go, which is not accessible by the government. And that's something which is huge market, right? And that's definitely where the need is really pressing.
And when we are talking about, using crypto by individuals in that, to store wealth or whatever, what have you, would you say that, uh, I think you would agree that the privacy aspect of that is really important, right? Because you have it in cash, so you choose what to reveal and not what to hide, but what to reveal. This is basically the principle behind privacy. But in terms of compliance and what happened with Tornado Cash and how to do it right. What's your take on that, or would you say that because the case of Tornado Cash, I know that it's still evolving, but how to make it right with what we have now? And do you see a clear trend in compliant private crypto, or more like it's just a matter of few projects, of course, like Aleph Zero, but there might be some others.
I think the way to approach this is to start building 100% compliant dexes. I think that's the way forward, right? And the interesting part is that you can do this in the way you take different puzzles, and this is what I love about Web3 in general, right? You have puzzles, you have different solutions, different providers, and you can put them together and it works, right? You have one guy, for identity for individuals, you have Gatenox for corporates and individuals, you have CoinFirm for blockchain analytics. You apply smart contract when the transaction comes. Actually, you need to go first, you need to check, okay, does the recipient or sender is verified? What is the risk? Is there any information which would be like triggering any sanctions, any high risk thing? Okay, it doesn't, so it goes to CoinFirm to check the risk related to transactions. And then going back to the pool, and everyone in the pool can transact freely, and it's much more efficient in terms of the process, because everyone is like pre-cleared, pre-clarified, and that works, right? So, and at the same time, the responsibility of the smart contract is simply saying, like, listen, I just make sure that all these puzzles work according to law, and they are tapping on the top regulations which are applicable to us. But otherwise, it's the same DEX as we had historically, but it operates in a fully secure way. Then you look at this, puzzles of identity, like Gatenox, other providers, and then you look at this from like what you can do for privacy, right? And that's something that we spoke extensively with Adam from Aleph Zero, right? When we can when we say, okay, we can create ZK proofs and Merkle trees, when you actually reveal what you want, and the data is stored. So if, for example, if you need to prove something to the government, you go and prove, but it's your call, right? It's something that you control, and it's something that because, like, frankly speaking, nobody wants to hold the data, right? Nobody wants to really be exposed to holding the data. It's most being making sure that you have to do what's necessary. What you need to have is like information. Is this transaction low risk? And if the guys on the receiving and sending end not on the sanction list, and that's something that you can put on smart contract, and that's something that it's fascinating in terms of compliance as well.
Yeah, but it's also, I think, similar and actually better to what you have with traditional banks, right? It's recreating that system, because in banks, to have an account, you have to KYC yourself, right? And then whatever you do, at the end point would be that this was your identity and this is where the transaction came, right? And what you mentioned earlier, I was actually amazed or by you saying, that the amount of money laundering in banks is actually by magnitudes larger than in crypto.
Huh. That's, just to give you some idea, the rough estimates is that there's around 3 to 5% of total GDP laundered annually, which brings us to 3 to 5% around the world. So in terms of numbers, this gives you around 2 to 3 to, you can also expand this to 4 trillion US dollar annually. The amount which is stopped, it's not even 1%.
And do you know like why the system fails? Because it fails if it's if they they were KYC'd, right? So and they are not getting caught. So what happens? Of course, you can share like the details. Probably that would lead to someone recreating that. But I'm just wondering, like you have centralized system, you have all the data.
If you try to prevent this, and you have governments working to do this, that's completely, preventable. That's something that it's not a problem at all. Banks are looking at this from the perspective that if this benefits us, let's do it. That's something which is like the typically compliance is done. I mean, there's a lot of effort, to do proper compliance in banks, but at the same time, there's not sufficient understanding and not sufficient cooperation between different organizations, right? So it's almost like I know what I want. I know what I know. So it's almost like, oh, this money came from this bank. That's it. This is like that's my responsibility. I don't care where I'm sending this to. I don't care what's the history. Is this true or not? I mean, is it valid transaction or not? And the amount of transactions coming through banks, the amount of KYC they do is simply, it's very difficult to control this, right? There's also, a lot of, let's say, conspiracy theories saying that it's benefiting the right people. And there's a lot of, stories in the compliance world when indeed this was happening. The money was disappearing, the money was transferred to the illegal organizations, the money was knowingly supporting terrorist financing, all this stuff. So, and that's a lot of geopolitics, like historically, like just to give you some idea as well, HSBC was established historically in Hong Kong, and it was established by the guys who are very closely working with the UK government at the level of MI6, MI5, all this stuff. So historically, a lot of HSBC people were former officers of the army or former officers of the Secret Service. So and you can put the theory that HSBC was used for the purpose of when the government couldn't, what the government couldn't do because it was too obvious or simply not possible for them to do. HSBC was used to go there, right? So Mexico, famous case with Mexico. This is opium wars were actually also supported by banking, and so there's a lot of this type of stories in banking. So yeah, when I hear it's funny because when I hear that banks bring trust and they are kind of there to protect trust on the market, I mean it's not true. It's completely not true.
But this is actually really, and I think this is like huge for crypto because this is basically solving this problem. It can solve this problem if it's not doing it now. It can do that, and this is really a positive note to maybe come to a conclusion. I think, like lastly, as we always try to find some ideas or advice for founders building in Web3. What would you say to people building some projects? How to make it right from the standpoint of KYC, AML, just how to maybe not make it right, but how to not fall into some unwanted consequences.
The easiest thing to say is you can do this and the cost associated and effort associated is not that large, right? It's just a matter, if you, the main risk right now, it's going to probably change, but main risk right now is the anti-money laundering sanction, protection. That's something that if you come to us, you have plug and play, which works with your system, whatever you're building, right? Whether this is wallet or, decentralized exchange, NFT market, whatever, right? It's simply plug and play. And this gives you, it's almost like insurance, right? It's almost like insurance. And that's something that protects you from being, prosecuted, from being put in jail. And that's something that it's easy to do. You don't lose clients, I believe, and there's a lot of research as well done on this, that having right process and procedures from the compliance perspective gives a lot of, let's say, safety for the clients, and they know this, and they treat projects like this as much safer when they willing to put more money into this as well. So there's like believing that not having KYC is actually, giving you advantage. Short term, yes, but typically long term, it's actually impacting you dramatically. And we've done these studies in CoinFirm. We analyze, exchanges which had KYC, KYB, and compliance properly set up. Most of them survived, the others didn't. So that's like the lesson, right? Binance coming to the right standards, like you can do this in a number of ways, but right now it's very easy to start, and there's a lot of tools, plug and play tools for compliance.
Yeah, and I think this topic will just grow bigger, right? As the education grows, as we mentioned, things like with Tornado Cash, like everyone who interacted with that was like landed on a blacklist, right? And you don't want that if you run a business, but so.
Yeah, your assets, your money, this is very important part.
All right. Any closing notes on your end?
No, I think, I'm very excited overall. I really like crypto and, blockchain. I love what you guys are doing in Aleph Zero as well, so the community is great.
Yeah, looking forward to, having all the cool things we're building together in the ecosystem. All right. So thank you very much for this conversation. And for all the listeners, of course, remember to like, subscribe, and see you in another episodes.